So happy to close the books on this month, and I think a lot of traders were some strong volumes going through, which did indicate some activity related to the end of the month. And if we have a look at the market for the month of August, the Aussie market down by 8.6%. That's the worst monthly performance that we've seen since the global financial crisis, since October 2008, where the market dropped 12.7%. And if we have a look at how Australia performed compared to the US as well as China, the US market is down 5.5% so far. They still have one session to go, and China's down about 12%. So you can see that the Australian performance has been in the middle. We've been swayed by both what's happening in the US as well as what's been happening out of China. If we have a look at it on a sector by sector basis, information technology and energy were the worst, down 16%. But we did see every sector in the red for the month. The best sector was utilities, which was still down by around about 1%. And some big performances, as you can imagine, a lot of the worst performers were in the energy space. Cenex, Beach Petroleum, as well as Santos, they lost more than 30% in just the 1 month. And on the flip side, some surprises in the retail space. We saw Pacific Brands gaining 41% this month on the back of a brighter outlook. We also saw Sims Group up by 21%, and we saw BlueScope Steel up by 18%. So altogether, a pretty volatile month. Earnings season, the volatility that we're seeing in the US, the instability in China combined for a pretty bad performance.
Mike, should we expect, what do you see as being the main drivers of volatility through this upcoming September? Does it remain the Fed? Does it remain China?
Well, both the Fed and China, but specifically the Fed, we're watching the 15th and the 16th of September. And the reason why the US futures sold off so badly were those comments from Jackson Hole. Janet Yellen isn't at Jackson's Hole this year, so the top US banker is the vice, which is Stan Fisher. And he made comments to the tune that the US economy seemed to be moving in the right direction, and really just, I guess, encouraged the view that a potential September rate hike is not off the cards, and it could potentially be a live event. So we are watching that FOMC meeting very carefully, and that's the reason why the markets have been a little bit cautious today, because of those comments coming through from Jackson Hole. The other thing that we're watching is China, and there was an article in the Financial Times over the weekend talking about the Chinese government not willing to be the support for the Chinese stock market. Now, the Chinese market was down around about 3% during our session, so that added to the volatility on our market. So I think from a macro point of view, we are coming to a place where we haven't been over the last 4 or 5 years, where we are looking at a raising of rates over in the US. So that uncertainty is causing the markets to be volatile, and September, I guess, is a key month. But generally, if you have a look at the last 4 years, October has been one of the best times of the market to have been invested in the market. So while the market tends to stumble over in August and September, and we traditionally do see another test of the lows during the correction, if you do buy sort of towards the end of September, it's been a pretty good strategy over the last 4 years.
Well, Mike, in talking about a negative session here and regionally, Julia, not the case for Transfield. Quite the performance today.
A great performance for Transfield, and remember, this is a stock that is undervalued. In 2015, the stock was down 35%. A lot of it because of concerns around the Nauru Detention Centre and the investigation into the behaviour of some of the staff that were hired by Transfield. So there was a little bit of worry going into the renewal of the contract for the Nauru Asylum Centre, and I guess the fact that we have seen renewal there, and it looks likely that the contract will be renewed, that we have seen the market now readjusting Transfield's share price. Now, if we have a look at Transfield, the defence, social and the property area, it has become the most important area for Transfield. It's responsible for the growth, and it's also a large chunk of earnings too. It makes up around about 40 to 45% of operating revenue and about 80 to 85% of EBITDA. So it is an important driver for Transfield, and the fact that we are seeing some certainty there, the market's just pricing that certainty back into the stock price. It has been a negative few months for Transfield. In 2015, it had been down 35%.